Good afternoon. Welcome back to the channel. This video is not financial advice, not a financial advisor. Do your own research, make your own decisions. All right, guys, welcome back. So in this video, I'm going to be talking about the Web 2, Web 2.5, Web 3 evolution that I see playing out over time with this whole transitionary process to blockchain technology, distributed ledger technology, moving from just a read-write type of an environment to a read-write-own web structure and design. And the reason why I'm doing this video is because a lot of us were on a spaces last night on Twitter with some people from the XRP community. And I do just want to say, if any of them watch this video, greatly appreciate it. And yeah, that was really cool. And thank you. But they were asking a lot of questions, and this was around midnight. And just for future reference, guys, if it's ever around midnight, I'm probably not going to be the best person to come up and speak. It's just not the best time for me. I kind of go to bed a little bit earlier, so just heads up for future reference. But I did say that I was going to do a high-level overview, and I do kind of want maybe this video or a future video that I will do to serve as kind of this is why ICP is different from everything else type of a video for people who are just starting to look into ICP. Because in my opinion, until you start looking into the design and the architecture of not just ICP, but the entire hybrid model and the entire tech stack in all reality, until you start doing that, it is difficult to differentiate one thing from another in this space, especially when it comes to ICP, because so much of it sounds the same. It just sounds like a bunch of technical jargon. And a lot of times, foundations and other layer ones, they do misrepresent their capabilities. Like when they're saying things like, there's this many apps on our network, this is running on our network. But in reality, the only thing that's on the network is a token, and 99+% of the computation is happening through big tech cloud. And on top of that, too, they're mostly all dependent on oracles. It just, when you hear all these different pitches and all this technical jargon coming from these different foundations, and a lot of them are misrepresenting their capabilities, it just all starts to sound like the same. It all gets blurred together. And so until you start having like the design architecture conversation, it's been difficult in my experience to differentiate ICP from other things. And so that's what I want to do in this video. And so for the sake of this video, I want to talk about three different models. The model for the web that we're currently on, so Web 2, and then what I would call the hybrid model. So think Web 2, but with some layer 1 blockchain incorporated into it. And then lastly, an end-to-end on-chain web where that can truly live up to the promises of Web3, read, write, own. And I'll explain why the hybrid model cannot live up to the promises of Web3 in this video. Okay, so the current model of the web that we're on, Web 2. Everybody, I'm sure, generally understands the current model of the web that we're on and the problems with it. I imagine YouTube uses Google Cloud, but regardless, problems with this current model, big tech pretty much controls everything. They own our data, and we have very little say and no ownership, right? And on top of that, too, this is the trajectory for cybercrime, and this is from Statista, and this is in the trillions of dollars. So this is only going to become a bigger problem over time, and this doesn't even get into artificial intelligence and deepfakes and all the problems that that's going to create as well. So this is the current model, right? Everybody understands that model and the issues with big tech pretty much owning and controlling everything. And so now let's talk about the hybrid model, because that's what we've been seeing in the crypto and the Web3 quote unquote space over the last couple years, is this particular model. Staying with big tech infrastructure, but integrating some layer 1 blockchain system as a ledger, as a database, as a payment system, as pay rails, right? To be used for a number of different purposes. For the sake of this example that I'm going to be using right now, probably just going to be talking about DeFi, but I will show some other examples too. But let's just talk about why this model, one, why it's an issue, but also why these layer 1 blockchains need this tech stack, I guess, around it in order to serve any useful function. So on its own, like if you just to take Ethereum on its own without big tech infrastructure, without Chainlink, it's going to have very limited utility because you can't build a YouTube on Ethereum, like directly on Ethereum. Can't handle that degree, can't handle anywhere near that degree of computation. Can't really do data storage. I mean, one photo being stored on Ethereum would be astronomical just as far as the costs. And so when we're talking about this model, it's important to understand the three main limitations for the sake of this video when it comes to traditional layer ones. One, they can't handle any significant degree of computation, and they can't store data directly on chain. And so that makes it really impossible to build and use applications directly on chain. Also, they're isolated networks. So in order for them to have any connectivity with Web 2, there have to be Oracle services in place. And so what we're really talking about here is a tech stack that increases counterparty risk, right? Because if you look at this model right here, the hybrid model, a lot of people generally assume the blockchain networks are very secure because they're decentralized, right? And to some degree, in many cases, that's true, but that's in a vacuum, right? That's Ethereum in a vacuum. Like you buy some Ethereum, you have it in a cold storage wallet, and you don't move it, right? That is a different level of security than if you start connecting your Ethereum wallet to MetaMask, and then now you're connecting it to these cloud-based applications, and that brings in a whole nother list of security threats and issues, right? So in a vacuum, sure, you could say the blockchain itself, before you start incorporating all these other technologies around it, right? You could say the blockchain itself is secure, but that's in a vacuum, and it has almost no utility in a vacuum by itself without big tech infrastructure and without something like Chainlink. All right. So hybrid model, layer one blockchain incorporated into the big tech infrastructure. The three main issues that really make many of these layer ones more so complementary technologies. What I mean by that is they're not designed to be used as standalone technologies. They're not like end-to-end full stack solutions. They're designed to complement the existing tech infrastructure to serve as a ledger, a database, payment system, pay rails. I used to just refer to it as offering a built-in payment system to the current version of the web. So we didn't have to continue to use the archaic pay rails that we've been using for years and years and years. You could just build in a payment system into the web. It can also serve other functions as well. All right, so for the sake of this, let's start using examples here because this kind of helps people, conceptualize and differentiate. So let's talk about Uniswap. I'm not sure who Uniswap uses. Doesn't really matter for the sake of this conversation. And so let's just look at the different issues with this model. Big tech can turn off the application whenever they want, or like let's just say big tech goes to Uniswap or whatever other DEX or whatever other quote unquote Web3 application and says you need to collect your users' IP addresses. Or they just put other restrictions on the Web3 application or company. And they basically say, if you don't do these things, if you don't delist these tokens, we don't like these tokens that you just listed. Because in a number of countries that we do business in, those are banned by the authorities. And so you need to delist those tokens. What are they going to do? What are they going to say? No. They've built their entire brand and scaled their business using big tech infrastructure, right? And so that's a big problem with this model just off the jump. Again, it doesn't matter how decentralized the blockchain is, right? If you have to incorporate this network into big tech infrastructure and they can pretty much dictate what the application, what the foundation can and can't do. All right, so it doesn't really matter for all intents and purposes if the blockchain is decentralized and secure if they have to depend on big tech and oracles, because then it's only as I would say, or the final solution, like the product itself, the application, whatever we're talking about, it's only as secure as all those other and as decentralized as all those other services involved in the mix, right? So just concept, just an important concept to think with moving forward. There's different technologies in the mix here that all contribute to whatever final working product, in this case, Uniswap. And it's just important to understand who's doing what and why, and where the most important roles are, where the different areas for exploit are. Also, security issues, they are automatically targets because there's a monetary benefit. Digital assets and the concept of digital assets is a newer thing, right, with digital ownership. And so they're automatically Web3, quote unquote, DeFi applications are automatically hacks for targets for hacks because there's a monetary benefit to hacking many of them. And this is another issue because many of these early startups in the Web3 space don't have the resources in place. They don't have the infrastructure. They don't have the team. And many of these larger corporations have had years to build out their infrastructure as it relates to cybercrime, all their firewalls with their IT team, with everything in place to make sure that they defend against exploits. But these Web3 startups don't have that amount of resources in place. And on top of that, there are already increased threats for or increased risk for hack because they're targets because there's a monetary benefit. Okay. No data ownership with this model. You don't own your own data with this model because this is still technically the Web2 model, just with a blockchain system incorporated into it, right? But again, big tech is handling 99% of the computation here. And the token, the Uniswap token, yes, the smart contract lives on Ethereum. Transactions recorded on Ethereum. But everything that you're seeing and everything that you're interacting with, as far as like Uniswap, everything that you're doing as an end user, that's being run through Big Tech Cloud. All right. So the front end run through Big Tech Cloud, token launches on the chain, transactions recorded on chain. But for the most part, Big Tech's handling 99% of the computation. So no data ownership, also no ownership in general, because it makes governance very like almost impossible with this. Yeah, you can have a governance system in place, but more times than not, the team themselves can just override you. And even if you do have a governance system in place, you're still at the mercy of big tech. In all reality, you're really at the mercy of your Oracle service as well. All right. So those are some of the problems with this model and this design. On top of that, too, again, cybercrime's going to the moon. So they're going to try to scale this model, which has a lot of inherent security risks. Just on its own, it has a lot of inherent security risks. But that's at a time where cybercrime is going parabolic. And AI and deepfakes is only going to make this exponentially worse, which that's a fluid situation because ChatGPT just got dropped, what, a couple years ago. Okay, so we've been over the problems with the hybrid design. Now, it's very important to differentiate two different things. This is a retail-based solution with the hybrid design. Would it be the same problem with an institutional product with the hybrid design? I would argue no, because they already have the security infrastructure in place, right? That's just standard operating procedure for them to set everything up to defend against hack and exploit. And so they already have that security infrastructure in place. So let's just talk about Stellar and MoneyGram. I don't know who MoneyGram uses. Doesn't really matter for the sake of this conversation, right? But they're a larger company. They have a lot of resources. They have the infrastructure that's in place, right? And on top of that, too, they can largely oversee and manage a lot of the different scaling solutions involved with this and or just the upkeep and the security of the network. And so this is a more workable model. So you just think about, MoneyGram was running on the old pay rails, and from what I understand, I haven't looked into this here recently, but using Stellar like just as pay rails, as a built-in payment system. All right. And so for institutions, this is a more workable model. But for retail-based solutions, especially for DeFi, there's going to be tons and tons and tons and tons of problems with this model. All right. Okay. Also, another thing too is that for these institutional products, when you look about the dynamics of DeFi solutions and like the concept of like liquidity pools and things of that nature, there's just a lot of elements that would make DeFi solutions, so retail-based Web3 quote unquote applications, there's just a lot of elements that would make them a more of a target for hack, things like liquidity pools, things like big honeypots that likely wouldn't be there with many of these institutional products. All right. So we've been over the issue with the hybrid model as it relates to retail specifically. It's more of a workable model when it comes to institutions. And so, speaking hypothetically, YouTube could incorporate some layer one blockchain network and use them. Let's just say it's Polygon or Arbitrum or layer two scaling solutions, but Solana, it could be, it doesn't matter, right? They could use this exact model and integrate some type of layer one blockchain and use it as a payment system. The difference with ICP, right? Difference with ICP is that look at all the different technologies involved here, right? Look at all the different technologies in the mix here. The difference with ICP is that you can build everything end to end on ICP. So think about ICP like Amazon Web Services, like Chainlink, and like a faster version of Ethereum, because essentially it can serve all those different functions. Look at the different technologies you would need in order to do something like this, maybe with YouTube and or MoneyGram and or Uniswap. Look at the different technologies that you need. And just understand that you can do all of that as an end-to-end solution on ICP because it's a full stack solution. And so you don't need Amazon Web Services. You don't need Chainlink. You don't need like another layer one blockchain. You can do it all end-to-end on ICP. And some of the most important benefits here is security. You can run applications end-to-end on ICP without firewalls. And so where do I see ICP fitting into the bigger picture here? I'm glad you asked. So if you look at the Web 2.5 model that's been rolled out over the last couple of years, and that's most common right now in the DeFi space. This is what I would call that. Now you can call it a hybrid model, a Web 2.5 model, whatever you want to do. But ICP could largely replace the big tech component of this. Over time, it would take time. It couldn't happen overnight. There's still a lot of back-end work that needs to be done. ICP still has to build out their infrastructure, have to work out any issues that come up along the way, still need more scaling solutions, right? And so over time, ICP could slowly start to replace the big tech component of this, right? And so when you're looking at ICP in the broader space here, I wouldn't look at it like a competitor to these other layer one blockchains. I would more so look at it as a competitor to Amazon Web Services, Google Cloud. Even though, yes, there is that, ICP does serve the blockchain function as well. Just look at it as like a Amazon Web Services, some type of high performance general purpose blockchain, and Chainlink, all rolled into one thing, but it even has more advantages and benefits than just those things put together anyways, in regards to everything being end-to-end on-chain and you not needing firewalls. And so I would expect to see over time, slowly, over the next 5, 10, however many years, I do think it will start happening with Ethereum in the next 2 years or whenever, after the integration is fully complete, 2 years from within that 2-year window, I would expect to see front ends for Ethereum-based applications, not all of them, but just I would expect to start to see that process moving to a decentralized front end model. And so this is what that would look like, okay? So for starters, hold on really quick. So we talked about how the hybrid model was set up, right? With the Ethereum, whatever. Yeah, let's just say for Ethereum, because I'm talking about Uniswap. Using big tech infrastructure, right? Chainlink is also needed in this equation as well. But instead of this general design, right? Once everything is fully complete with this ICP and Ethereum integration, and there's CK twins for ERC20s, once we get there, you can eliminate the big tech component of this. And I think you could probably start to weed out the Chainlink component as well. But you can definitely weed out the big tech aspect of this. And so this is what that would look like just as like for the look and feel. It would still look and feel like Chainlink, like Uniswap, right? It would still look and feel like the Uniswap DEX. However, you would have those CK options on there as well, right? So you could swap for CKE. You could swap for the different, there would be CK twins for ERC20s, all right? And so this can happen on ICP, and it can happen for a fraction of the cost at web speed. And so you can swap for CK Bitcoin, you can swap for CK ETH and or the different ERC20s, and you completely eliminate the big tech component of this. And so now we're on a true end-to-end on-chain Web3 model that combines both Bitcoin and Ethereum. And over time, it's going to combine Solana. It's going to combine all these other networks as well, because this gets into a future video, which is the next, I would call it like a superpower for ICP, is they can integrate natively with these other networks like Ethereum. They don't need third-party bridges or middleware, and they can read, write, and sign transactions on the Ethereum blockchain and on the Bitcoin blockchain. And so this gives them the ability to incorporate those assets and those networks into their platform, into those applications as well. So I would define this as a true end-to-end on-chain model, because you're eliminating the big tech aspect of this. And over time, as there's more development with ICP, this will be able to offer real ownership, with you being able to own your own data and you being on a network where you have a vote at the governance level, at the network level, and at the application level. So they have a governance system for the network level and the application level. And so this is a true extension to the public internet. Think of it as just a giant or a tech stack to replace the existing tech stack that serves as an extension to the public web, to the public internet. And there's a governance system at the network and at the application level, and they can operate on all these other networks as well. And so this is where I would see that coming in over time. And I just use Uniswap as an example here. Ultimately, I don't really care what happens. Like, obviously, I would like to see Uniswap over time migrate their front end to ICP, but it's not like a big deal breaker for me or anything like that. I just use them as an example because just it's the easiest, most familiar example to most people. But this would be the true end-to-end on-chain model. And they've already done demos. I think people at dfinity have already done demos with just what it would look like with a Uniswap front end on ICP, or just that it is possible to do that. But I would imagine that that would make the most sense after everything with the Ethereum integration is complete. So that way there could be CK twins for ERC20s, and you don't have to incur the gas fees until you settle back on Ethereum, right? So all the in-application stuff can happen at web speed at a fraction of the cost because it's happening on ICP. The second that you withdraw that CK asset, maybe it's Ethereum, CK ETH, or CK ERC20, the second that you withdraw that and you send it back to whatever other separate Ethereum address, then you would incur those gas fees because at that point in time, you're settling back to Ethereum. But this was really what Dominic used to talk about, where ETH would just become a DeFi settlement layer over time. Benefits of the fully on-chain model: it's more secure. And again, this is a time where cybercrime is going to the moon. You own your own data. This is going to be a new concept for people, right? Think about uploading videos as like NFTs. Just imagine, it's the same concept of, not your keys, not your crypto, not your keys, not your data. And you own the app on-chain governance. Right now, even if there's some type of governance system in place, big tech is ultimately the final decision maker. And on top of that, Chainlink still has a lot of influence here. With this type of a model, it's end-to-end on-chain. And ICP has the governance system at the network and the application level. And so when changes are made, when proposals are accepted, they are implemented and they're immediately implemented. And that's why ICP is leading the entire crypto space by, I think, like an order of magnitude when it comes to DAO governance and the amount of successful proposals that have been implemented. You own the app, on-chain governance, read, write, own. This is the biggest aspect here, okay? There's no true ownership with this model. You can maybe do a little bit better job adding some additional technologies to give it a little more ownership than what we have right now. But it's just there's going to be a lot of limitations to this model. And again, they're facing the two biggest catalysts that they could possibly be facing. When I say they, I mean anybody using this model, and planning to that's looking for retail-based solutions. They're facing the two biggest catalysts ever with cybercrime skyrocketing and artificial intelligence and what's going to be possible with deepfakes. And so I would argue that this is going to drive the demand for a shift to more of an end-to-end on-chain environment. I don't think ICP is going to be the only infrastructure technology that's used over the next 5 years. I do see ICP starting to eat more and more and more and more market share over time. But yeah, that's it, guys. I hope that helped. And I hope that helped with some newer people too. And I tried to make this as like as explained in layman's terms the best that I can, but using a lot of different examples because I feel like examples help people. It becomes a more real thing to them as opposed to just a bunch of words and technical jargon that they're trying to conceptualize in their head, like what it all means. Okay. That's really all I have for this video. It's not financial advice. Let me know if I got anything wrong. And yeah, that's it. Not financial advice. Take care. Have a good day. I'll see you in the next video.